Good morning, everybody. It's Steve Bates at the BIA. I'm joined this morning by my colleague Martin Turner for our webinar on the outcome of the spending review. Morning, Martin.
Morning, Steve. Morning, everyone.
So let's get started. So you can see that the next slide shows me and Martin. That's who we are. We were planning on doing a slightly broader webinar on this occasion, because we've been working on the basis that we thought by this point we would have the spending review, the industrial strategy and the life sciences sector plan. They are coming. So we saw the spending review from the government on Wednesday, but we've not yet seen the industrial strategy. It's still expected this summer, but I don't think we have a date yet. And we also don't have a life science sector plan yet. So rather than this be a bumper on all of those things, we are only looking today at the spending review. And of course, the other thing that we thought might happen was the 10-year health plan. That also hasn't happened yet, but we are expecting it before the summer from the government. And the voluntary pricing access and growth reset has also not come out, but we're expecting that, for those of you who are following that, to come at the same time as the 10-year health plan. So a little bit here about things that we're not covering today, but we thought we might be, but we expect them to come at some point going forward, but they're not with us yet. So we sort of saw in the run up to Wednesday the pre-briefing of certain parts of the spending review, and you may have seen this on Sunday about the £86 billion science and tech package, particularly focused on regions outside London and the southeast. So that was one element that was highlighted by the government ahead of the spending review, and we welcomed and looked at that. Martin, anything from you on this one?
No, just I think interesting and positive for our sector that R&D was chosen as the government as one of the big things to lead with going into the spending review. Yeah.
And then, of course, the other announcement that we saw ahead of the spending review at London Tech Week, there's Science Secretary Peter Kyle in his ARIA t-shirt, talking about OpenBind, a new consortium based up at Harwell, backed by £8 million to collect data on drug-protein interaction, with a great community supporting that, including some BIA members. So a good announcement there, and another one that was sort of pre-trailed ahead of the spending review.
You know it's Tech Week when the minister's wearing a t-shirt, don't you?
So I'll hand over to you, Martin, to take us through actually what we saw on Wednesday rather than the pre-announcements.
Thanks, Steve. Yeah, so here are the headlines, and I'm going to take us through a bit of the detail, and Steve can chip in and give his view as we go along. So I think overall, this was not an austerity spending review. That's the view of the Institute for Fiscal Studies and others. Day-to-day spending by the government will increase by 2.3% over the spending review period, and capital expenditure even more by 3.6%. Some of the highlights for our sector, obviously an awful lot of different things were announced, but for us, we are particularly pleased to see the British Business Bank have a 2/3 increase in its budget, allowing it to invest more into life science scale-ups and venture capital firms as well. The R&D budget, as already mentioned, was trailed as one of the centerpieces of the spending review, and its budget is going to rise to 22.6 billion per annum by 2030, which is a 10% increase before inflation overall. So that's pretty positive. It's roughly in line, or maybe just above what previous governments were intending to do. So good to see that confirmed. Within that 22.6 billion, there'll be 2 billion or so invested into AI, and this was part of the Science Secretary's announcement on Tuesday. So significant investment for AI, and also, as Steve said, he was wearing the ARIA t-shirt, the Advanced Research and Innovation Agency. That's going to have its budget increased as well, and that's a long-term independent science funding organisation, so good to see. Within that R&D, there's also, as Steve says, more regional and mission-based funding. We'll delve into some of that in detail. Fantastic to see 520 million confirmed for the grants program for Life Sciences Innovative Manufacturing Fund. This is capital grants to encourage manufacturing in the UK. There was a 3% annual rise in the overall NHS resource budget, but a flat Department of Health R&D budget, which largely goes to MHRA. So again, we'll discuss that in a little bit.
And I like the fact, Martin, that you're going to take us into the geeky world of how the Treasury operate their numbers in this one.
Yes, please forgive me for getting a bit geeky, but I think this is really important. So over the past 10 years or so, there's been some quite important, significant changes in how the UK government counts its beans, essentially in various ways that have benefited our sector. So back in 2017, they changed counting R&D investment from resource spending, so day-to-day spending, to capital investment. And then a similar change happened recently with the British Business Bank as well, where their investments are seen as assets on the government books rather than liabilities. Both of those changes, when you have a world where fiscal rules are set by chancellors that tend to limit day-to-day spending but allow borrowing to invest in capital expenditure, both of those changes have allowed governments to put more money into those areas that our sector particularly benefits from. And now there's further reform of something called the Green Book. So this is what Treasury uses when it's judging whether a government investment is worthwhile or not. Does it bring enough benefits to the economy? And I think for a sector like ours, where R&D timelines can be long, the payoff can be far in the future, we've often not really benefited from the existing rules as they sit. So we're really pleased to see further reform of how these beans are being counted, which we think could lead to more computer says yes for our sector.
Yeah, no, I think it's really important, Martin, and it's the type of thing that you just won't see on the national news or even reported in the main papers. But this underpinning way in which the Treasury counts its own analysis is really, really important. And I think the changing in this benefit cost ratio could really have an impact for some of the manufacturing and longer term investments that we hope to see in the UK. So yeah, no, it's good news, one you probably won't see elsewhere.
So I put this slide in just to kind of illustrate the impact of some of that. So health and social care is seeing a huge increase in its resource spending, about 3% annually, which is still actually below the historical average, and particularly what we saw in the last Labour government. But it is increasing far more than, as you can see, any other department for its day-to-day spend. So this will impact, one hopes, patient care, and in theory could allow for more room for medicine spending as well. But of course, as Steve said, the VPAG negotiations are still ongoing. Over in capital expenditure, you can see defence, as has been trailed in the Strategic Defence Review in the past few weeks, is getting a huge increase, largely on submarines, but there is R&D within that. Equally, transport is getting a fair bit of capital expenditure. You can't see the Department of Science, Innovation and Technology within that, within this graph, but it is there, but only because it's really, compared to previous estimates from previous spending reviews, it's only having about a 0.5% increase in its capital expenditure, which I'll come on to soon. So starting to delve into the detail with the British Bank reforms. So not all of this was announced yesterday, but it's worth kind of pulling it all together because this is a key institution for our members. It provides a significant amount of investment, either directly into life science businesses or through venture capital firms. And it's the biggest LP for venture capital in the UK. And I think actually now the biggest direct venture capital investor into life sciences as well in the UK. So this is a really significant institution. First, we've seen this in the past few months, but the British Growth Partnership is up and running. This is the new investment arm of British Business Bank that allows it to take in pension money or other third parties' money and invest it through its own programs. British Patient Capital, that many of you will be familiar with, has actually ceased operating as an independent brand and the team has been brought within the British Business Bank. But that's nothing to worry about because actually that team is expanding. We know them very well. They're expanding their life sciences team, so that's all very positive. And on that front, they've also brought in Leandros Kalasperas as the Chief Investment Officer of the overall operation. And he used to be CIO of the University Superannuation Scheme, so the pension fund that looks after universities, and also West Yorkshire Authority as well. So he is from the pensions world, but he's been brought in, and we've met him, Steve and Dan Mahoney, our chair, and he talks a very positive message about venture capital and life sciences.
No, I think he knows and understands the sector, has experience of investing in it, and and understands the rationale of getting Britain's wealth to back Britain's growth sectors.
Yeah. Now then, obviously the bank needs its own firepower to be able to invest into our sector, and there's been a few positive developments here. First is that they've got authorization from the Treasury to reinvest their profits rather than return them to the Treasury. So they've got a permanent capital base now, and they've actually had their capital base from government increased by 2/3 as well to 25.6 billion, allowing them to invest about 2.5 billion each year. So a significant increase there. A lot of that money is going to go to the eight sectors of the industrial strategy, of which life sciences is one. And also there's going to be programs on supporting first-time VCs to build up the sector, and regional VCs as well. But more detail will come on that in the coming weeks.
And it's not just one bank that's happening, Martin. There's also another organisation called the National Wealth Fund.
Yeah, I think this is one that members might not be familiar with. It's a new brand, rebranding of the National Infrastructure Bank, and it could become a significant player in our sector for later stage funding, so closer to market, perhaps supporting manufacturing investments in life sciences. But it's also it's focusing on clean energy, digital technologies, and advanced manufacturing and transport, but its mandate does include dual-use technology, so that can include engineering and biology, and life sciences. So we're engaging with this organisation, making the case for them to build up expertise in life sciences, but also collaborate with the British Business Bank, who already have built up that expertise in the sector. So one to watch. Moving on to R&D. So as you can see from this graph from the Campaign for Science and Engineering, R&D investment across government is to increase above inflation. So the dotted line is what it would do if it was increasing with inflation. So the curvy line is showing that it's just above, which is positive. And the Department for Science, Innovation and Technology R&D budget, which largely funds UKRI and Innovate UK within that, looks pretty much the same. So that's positive. It's growing. Tough financial environment for the government. It's good to see R&D featuring positively. If we delve into that, they haven't actually set out in the spending review how much UKRI is going to get, but they have said that some of that money is also going to be used for Horizon Europe and potentially its successor if we negotiate with the EU to stay into that. But there's quite a lot of other spending that has been named, which does raise the question of how much money is going to be left over for UKRI, which will be a negotiation between UKRI and DCIT over the coming months. But as I said earlier, 2 billion for AI, not all into life sciences, but open bind and other initiatives, which will be really beneficial for our sector. And it's worth saying in London Tech Week, where AI is obviously the big focus, life sciences and the applications of AI into life sciences has been very much part of that, a huge part of that conversation, both from government and from attendees at Tech Week. ARIA, as I said, will get a 1 billion increase to its budget. Sectoral programs aligned with the industrial strategy. So as I said, there's 8 sectors of the economy, including life sciences, which should be prioritised through that. But also technology programs. So engineering biology is seen as a technology. It has its own strategy from government, and we'd expect some of this funding to be prioritised for engineering biology as well. Also, the government not only has an industrial strategy, but it's got missions, 5 missions around growth, supporting growing the NHS, clean energy as well as two others. And there's 500 million to support R&D to achieve those missions. The Local Innovation Partnership Fund getting 400 million or so. This is putting R&D budgets into the hands of local mayors. So quite a novel idea. It'd be interesting to see how they use that. Edinburgh University has had its supercomputer funded. This was one of the programs that was cancelled when Labour came in early on in government. And then finally, 400 million for defence R&D, of which engineering biology is highlighted as one of the areas to receive money.
So Martin, the way I think about this, in a sense, there's money for the banks, which are likely to invest as equity or into VCs as a form of money to come into scaling companies or startup companies. The R&D money will go both into universities and basic science, but some of it that comes through Innovate means that Innovate will be able to run programs that will be grants for companies, and we'll follow that through. Although this picture, I think, will take some months to work through because we've got a new boss coming into UKRI in the summer, and it will take a while for these to turn out into programs, whether that be MRC programs, BBSRC programs, what Innovate decide and choose to do. So there'll be quite a lot of detail behind this over the next few months and years.
Absolutely. We forgot to say at the beginning, do use the Q&A function to ask questions, which we'll come to at the end. And we'd welcome your views on this as well. Are you seeing this as positive announcements or negative?
Yeah, so I think that this is the third, this sort of the other way of thinking about how money might come to the sector. Obviously, the NHS is a big buyer of drugs and devices and life science outputs. So we'll also think about the increase in the budget, you say, of the health department as positive for the backdrop to the NHS as a purchaser of things. I think you've highlighted here a couple of things that we knew in advance, but were confirmed and were given status on Wednesday.
Yes, yeah. So the Health Data Research Service, which is meant to be a one-stop centralized service for researchers and innovators to access NHS health data. Keir Starmer led an announcement with this a few weeks ago. It's going to have 600 million from government and the Wellcome Trust. But actually they didn't say how much of that was going to come from government, but it was repeated yesterday, which is positive. And even more positively, the Life Sciences Innovative Manufacturing Fund will have its full 520 million, which was promised by the previous government. It was in, I think, some of the pre-election Labour government documents, Labour Party documents, and now over the next 3 or 4 years, there'll be 520 million or so to deploy in the form of grants to help bring in international manufacturing investments into the UK and also support UK-based companies who are thinking about where to base their manufacturing investment as well. Steve, do you want to?
Yeah, I mean, of course, the key thing here, I think, with the spending review is you need to think of it as one part of what the Treasury do. They'll do a budget in the autumn where they work out how they're going to collect the money, and obviously this will remain part of the political discussion as we go through the year. It was interesting to see basically the takes here by the Conservatives, Liberals, and Reform, not really out of line with expectation, but these were some good context, I think, for us to understand. And spending review always feels like the good news. The budget may well be where we see increases in taxes, and obviously we saw increases in taxes on businesses in the budget last year. We're interested to see where it gets to, but I think that the core aim here is, because as you said at the start, there's definitely not an austerity position. It's a go for growth position with some clever and creative ways in which investment is being put behind sectors such as our own to try and get the economy going and growing. Why did you put a picture of Alan Mack into this one, Martin? I think it's an important one for the members to understand.
Yeah, so Alan Mack is a Conservative MP and he's also Shadow Science Secretary of State. And he recently emailed us and others in the ecosystem with this policy review that his shadow team are doing asking some quite provocative questions, I would call them, about R&D and public R&D, the value of it. Is it crowding out public investment? Is it focused on the right things? So we put this link into the chat for you. It is worth going. There's only a few questions, but I think the more he hears from our industry, the better.
Yeah, I think he's having a thought moment, isn't it? And it's interesting that he's doesn't seem instantly persuaded of the case for R&D tax credits. He, as you say, it's arguing, or the questions phrased around whether public sector spending is crowding out private sector investment, and why that is. I think we know that there's been long-term reasons why the stock exchange hasn't invested into UK innovation. We'll talk about those in a minute, but I think if we are supportive of some of the things that are important to companies, it's important that they understand, you know, how the biomedical catalyst works, how Innovate UK grants have made a real difference for scaling companies, why the British Business Bank is really important for venture and other things. But it's a moment, I think, where he's thinking this through for the future of the Conservatives.
Yeah. We've got a question from Peter Cousins saying this is clearly an emphasis on investment in tech, including AI and life sciences, also for manufacturing. How much new investment is available for more traditional forms of drug development? We don't have the details of that yet, Peter. A lot of that will come through things like the biomedical catalyst and Innovate UK, which we know from our conversations with their leadership that they are committed to. But we've not got down to that level of detail yet. Steve, I don't know what you think.
I mean, I think if you look at the venture funds that are supported by the BBB, they are the ones that we would think of as doing the full range of life sciences, supportive of drug discovery, drug development, and obviously MRC investment into the science base often results in the early stage things that come through as therapeutic development. So, you know, catapults are still supported. We'll see more detail of that from Innovate UK. So, although you're right, we focused on, you know, what the headlines are around novel ways of doing things with AI. I think there is still that continuation of life sciences in its broadest sense, and I'm expecting and hopeful that the schemes and organisations that focus in this area will continue as a result of this.
So, moving on.
So, talked a little bit about how the public sector might support the public sector spending might support the industry, Martin. So you've got the banks and the money there that comes through into equity and through VCs. We've got the Department of Health spending money on the NHS, which will, you know, buy products, and we've got the R&D spend through DCIT into research councils and Innovate. But we're not just working on that side, really, are we? We've worked hard to try and get more private sector investment into UK life sciences, particularly focusing on the UK pensions organisations to get them to back British innovation. So alongside trying to get public money in, we're also keen to crowd in private sector capital. And I think it's really important that you spend a couple of minutes taking us through what's going on there, because it's an important part of the picture.
Yeah, this is a busy slide. We will share these slides with you afterwards, by the way, so you can study them over the weekend if you want. But it shows that we feel we're at a tipping point here, and there's been a long journey to get us to this point where pension funds and the government seem to have really bought in. Well, at least the government has bought in, and will the pension funds buy in to the message that BIA has been shouting for quite some time, since at least 2015, when our vision for the sector in 2025 said that pension funds would be were an untapped source of capital for our sector. Obviously, access to finance has been a long problem for our sector in the UK. And since then, as you can see, there's been a steady drumbeat, and I think it's sped up over the past few years, of government reviews, government announcements, new programs launched that have all been targeted to try and unlock the pension funds as a new source of capital. And BIA has been there at every step of the way. So back in 2017, the Treasury launched its patient capital review, and we got life sciences and pensions in there as two areas of key focus, leading to the setup of the British Patient Capital in 2018, the launch of the Life Sciences Investment Programme by British Patient Capital. We then did detailed work through the Life Sciences Scale-up Task Force in partnership with the Office for Life Sciences, where we looked at this specific challenge of pension funds and why they weren't investing into our sector, and recommended various programs that then essentially came to life in the following years. So the long-term investment for technology and science program from the British Business Bank was matching up pension funds with VC funds. And then we've got the Mansion House Compact, basically delivering on a similar British version of something that we had said in that task force needed to be done, which was copying the French Tibby scheme, which had government leadership, brought the industries together, and got commitments to invest. Then obviously we're heading towards a critical general election where changes in party could happen, and we engaged with the Labour Party first through their startup scale-up review, and then through prescription for growth, to critical pre-general election documents where both outlined life sciences and pension funds as areas of priority for growth if Labour were to get in. They did get in, and we had a pensions review launch, which BIA has been engaging with. The British Growth Partnership, which I spoke about earlier, was announced. And then taking a pause in 2025, we looked back at the 2015 vision, redid it, and still identified access to capital as a key challenge and pension funds as a strong potential solution. Then Rachel Reeves did her own Mansion House Accord. The previous one was under Jeremy Hunt, of course. And now most recently we've had the pensions review published, and we'll talk a bit about what it recommends in a moment. But as you can see, there's a lot of work that's gone into getting us to this point.
Yeah, and I think your core point, Martin, that this is speeding up and basically the snowball's going down the hill. I think it is coming. It has taken some time, and we're probably not feeling the benefit of it directly in the sector yet. But this is a strategic change that is going to really fundamentally alter how things operate for the long term.
Yeah. So there have been some positive announcements. Phoenix and Schroders used that LIFTS money, that long-term investment for technology and science money from the British Business Bank, to set up a partnership, saying that 20% of that 500 million fund would go into life sciences. They also separately launched a vehicle called the Future Growth Capital Fund with 1 billion initial investment. Life sciences was said to be part of that. And then we've seen a few different pension funds, NatWest Cushon, Aegon, the local government London Fund, and Smart Pensions, all put out positive messages, press releases, saying that they're going to invest into venture capital, and life sciences is part of that. And then finally, we have heard that some local government pension schemes have been giving mandates to City of London fund managers to invest in small cap listed companies as well. So positive words, definitely, but not necessarily money deployed into companies quite yet, which is what we're pushing hard for. And it is really important because, as you can see from this chart, we look at investment in our sector regularly. And actually in the first quarter of 2025, a very large amount of money did go in venture capital into our sector, but really just into two companies, Isomorphic Laboratories and Vediva Bio. And so we know it's really tough out there for many companies, and we do need more venture capital into our sector. But Isomorphic and Vediva are important because those are ticket sizes, those are investment rounds that could have attracted UK institutional investors such as pension funds, but actually there were no UK investors of any sort in those deals, despite both being UK headquartered companies. So to delve into the Mansion House Accord a little bit, we've mentioned this previously in other webinars, but it's 17 pension funds committing to invest into private markets. Worryingly, unlike the Mansion House Compact, no mention of specifically venture capital, private equity, yes, but not venture capital. And no mention of life sciences. Again, life sciences and biotech was mentioned in the previous compact. So, we welcomed this, but there's definitely warning signs that there's a bit of a hesitance or backtracking, really. And this sparked us to go one step louder and call on the government to be bolder. Steve, do you want to take us through our reasoning?
Yeah, so I mean, this is a letter that we got in the Times the other week. The point being is that that much of this agenda, although we've been at the heart of it for many years, is still contested by many in the pensions industry who don't see that they have a duty or responsibility to the nation or investing in the nation. They want to basically do what they want and continue to do what they want without any interference from the outside. So this agenda remains contested, and of course, if so, I think there's a proper discussion going on around, and we're trying to make sure that both life sciences is seen as a good opportunity to invest. Obviously, we attract investors from around the globe into UK life sciences, and we're able to build very good companies. It's just a shame there's not Brits there, and one of the reasons why that's important is that when there's moments of decision around the future of companies, that often is the moment where foreign investors choose to move assets, sell assets, that we don't scale the companies to full potential here. So that's the one underlying reason why we care about the ownership structure, as well as increasing some access to finance. And the reason why we're very keen on holding the asset allocators' feet to the fire is that we fear that they will put us in the it's all too difficult box. And if we don't keep the pressure on, they will look to fulfill their duty to invest in Britain by investing in infrastructure, roads, rail, not in growth companies and the growth economy. So we think we've got to continue to make this case, and we look to you guys to help us with this. And of course, the backstop of that argument is that we want the government to keep an eye on this, and if the asset allocators are not allocating into UK growth, we need there to be the possibility of them being forced to do so and living up to the expectations they have freely given. We think there's good opportunities to invest in our companies. We think there's good theses, and we know that people are making money out of investment that we've got. But we want to keep that there as the option of mandation. It's not that we're massive fans of mandation, but we want the option there, because what we don't want is all of this work to happen and then for it all to go into infrastructure and nothing to go into growth classes or into things like life sciences.
Yeah, absolutely.
And I think, yeah, I mean, what was interesting to see, and on the next slide, was the big boss of the London Stock Exchange Group at Tech Week is also interesting in he's up for making the case that obviously UK government provides quite a lot of tax breaks to people to put money into their pensions. So if you're in the pensions industry, I'm forced to put money into pensions as an employer of Martin. I'm forced to run a pension scheme for Martin, and that has to go into pensions. So they've got a state guaranteed source of income in the pensions industry, but sometimes they feel like they don't see that as something that they've then got to invest back into the UK in any degree at all. We're not suggesting everything should be invested in the UK, but a degree of it should. And I was interested to see that this case that was also being made by the London Stock Exchange Group, tax benefits should only be available to UK pension funds that invest a minimum share of their assets back into the UK. It's just common sense. So it's not just us who are making some of this argument. It's a series of people making this case economically now, which we've been at the heart of for many years.
Yeah, thanks. And then so the pensions investment review was published, as I said, on that timeline. And this within that review, the government looked at whether they needed to mandate pension funds to do this, and they need legal powers to do that. And they have concluded that they may. And BIA certainly said that they shouldn't be taking that off the table when we inputted into that consultation. So we're pleased to see the legislation published to go through Parliament. It's at the very earliest stages at this point, but there is a bill powers within it to let the government set minimum asset allocations into things like venture capital, private equity, UK assets, etc. So we'll be engaging with that bill, working through groups such as the All-Party Parliamentary Group for Life Sciences that we run, making sure that there is cross-party support for those powers, which we do feel will be necessary, will potentially be necessary if the pension funds do not stick to their commitments.
So I realise that we've wandered at some distance from the spending review, but I thought it was important, and thank you, Martin, for giving us the context of the BIA is fighting for public sector allocation into our sector to enable companies to grow and scale through banks, through the Department of Health budget, and through the UKRI, the science R&D budget. And we're also making the case that Britain's private assets look once again at a fabulous opportunity in our sector and building a substantial piece of policy behind that, which is sort of the pensions agenda, the Mansion House stuff. I think that's probably where we're up to. Well, happy to take questions either on the spending review or on some of the elements that haven't yet been published. I'll be speculating about, and I don't have a crystal ball for the sector plan or VPAG or any of those things, but I hope that's been useful and gives you a good snapshot of where we're at in the middle of June for our sector.
Thanks, Steve. We've got one question. How much of a threat to the sector is the flat DHSC capital budget? Is this politics rather than economics in terms of funding the NHS today instead of the important investments it needs?
So I think obviously the research ecosystem within the NHS, NIHR, and the clinical research community have a reasonable budget within the expanding DH budget. I think not all of that has always been focused into commercial clinical trials. Much of it is investigator sponsored. Some of it is public health research, which is valuable. But it's not usually been the area where BIA member companies have come to me and said, this needs a massive expansion. Obviously, it's very useful to be able to work in partnership with an NHS that's research hungry, research ready. I mean, we know that the population of the UK remains committed to things like our future health and engaging with clinical trials. So I think society's in a good place. I'll be interested to see whether operating in the new environment that produces significant challenges is not one that has come to me from members as being as crucial as R&D tax credits or Innovate UK funding.
Yeah, we would welcome feedback on that. I think my comment would be that within that capital budget, NIHR does look like it's going to have a flat budget for the next period of time, but there is so NIHR's budget, I think, is 1.2 billion or so. There is about 300 million coming from the VPAG deal from industry to fund commercial, an expansion of support for commercial clinical trials in the NHS, about 300 million. So there is that additional as well. Which leads us on to Hannah Edwards' question. Was there anything in the spending review that concerns you or anything important that was missing from it? I mean, more detail, I think, would have been good on UKRI and biomedical catalyst. We're always keen to get a special mention of that and a commitment. But we've got no serious cause for concern in that regard, but we will be working hard to make sure that that key funding programme is supported. Steve, any views from you?
I mean, I think we can see that there is a new context in 2025 with the focus on the increase in defence spending as a result of the global situation, and that's the reality of where we're at. We've not made a case against that, and I think we have. I think we're doing well to maintain life sciences as a growth sector. I think it's on us now to demonstrate that growth and produce innovation, both that makes a difference to NHS patients, but also that we can sell around the world. But I think that for me is the context change. It's not one that that concerns me massively, but I think we just have to understand that the focus on life sciences that there was during the pandemic is now blended into a serious discussion around defence.
Yeah. Okay, I see there's no more questions. So just to say, there's some fantastic webinars coming up and events. Do join us on the 26th of June where we'll be talking about something that you've probably never heard of, but could be quite important for companies using uh, digital sequence information of DNA from species from developing countries. And we've got fantastic events. Particularly, I'd like to highlight the summer party on the 9th of July. Tickets are selling fast. Please do come and join us for a drink and to celebrate another year of great collaboration between our members and the BIA and government as well. We'll have government friends there.
Yeah, no, I think it's a wide range of events. We look forward to seeing you. Put these dates in a diary for the autumn. The future of life science regulation will be great with the MHRA as ever on the 6th of November, and looking forward to being in Newcastle for bioprocess at the end of November.
Also in November, we got London Life Sciences Week. This is a fantastic week-long event, well, series of events. Lots going on around the Jefferies conference in London in the middle of November. Lots of fringe events and lots of parties, all under the umbrella of London Life Sciences Week, which we are delivering in partnership with London and Partners, which is the London Mayor's Office arm. So do go onto the website to take a look at all those events. And if you're running an event and want it to be listed on that website, do get in touch with us as well.
Yeah,
And if you're heading,
I think it will be the moment when the world will be in the UK looking to partner with each other, but also with the UK ecosystem. So I think it's going to be an important moment, and lots of investors fly in, lots of people are around. It really is the moment where we can show off to the world the capacity of companies, small, large, and scaling. And what I'm doing next week, many of you will be in BIO in Boston next week. On the stand on Tuesday at the Global Bio Conference, we'll be formally launching the London Life Science Week and inviting people to come. And we'll do that at the reception on Tuesday at 5 o'clock. So if you're at Bio, do come and join us on the UK Pavilion 765 next Tuesday afternoon.
and if you're not already a member, but you like you see what we're doing and like to support it, then please do join the membership. You will support our work to influence government policy. You'll be able to connect with the ecosystem through our brilliant events and online communications, and you'll save money on your lab supplies and other expenses as well. So do get in touch through our website with our membership team if you're interested in that. And then finally, to say thank you to our sponsors who make all of this possible as well. We're very grateful for all of our members and especially our annual supporters. I'll leave the last word up to you, Steve.
Well, just thank you all for coming. I hope you found it useful. Feedback is always welcome to us as to whether this is right. And I think we're thinking hard, Martin, about whether with the other things that are coming up, the sector plan, the industrial strategy, whether it makes sense to pick up on those things perhaps before the summer. But I think we'll see how it goes and work out what's come out, and maybe after the 10-year health plan is also out, it may be worth popping one of these in the diary. So we have not got it planned yet, but we may look to do something there if it's of use. Thank you for coming, and hope it's been useful. Thanks for Martin, an excellent set of slides.
Thanks, everyone.